Guys, welcome back to the Independent Investor channel. My name is Ryan. These types of videos are a real treat for me, where I really get to show you guys what it is that I've got as a snapshot into my portfolio. And this will be installment 2 of my 25 stock dividend portfolio that I've got. And I'm offering 5 stocks per video. That allows folks to come in, watch a quick 5-minute message and get an idea of what I got. And for you guys that are new to the channel, certainly subscribe to the channel, okay? We're not just offering stocks for people to frivolously go out there and buy. The real niche on this, and you can agree or disagree with the stock picks that I put forward, these good dividend payers. But the real niche of the message that we're putting across the channel for especially new investors and maybe investors that have been investing for a long time really didn't understand that the option of self-directed investing even existed out there. And the trick is to take these good quality dividend payers and house them in an account where they're not going to be restricted to grow going forward, okay? So please enjoy. We're going to kind of get into this. And as usual, I'm going to take all the write-ups from all the information that I've got and provide that to my Facebook group. We've got over 500 members inside the group learning about portfolio building. And this is a perfect place for me to drop some of this information. The first stock I've got is Verizon. And I've owned Verizon for well over 5 years. It's a really interesting stock to own. The dividend that's paid out is extremely healthy. They trade at just 11 times forward earnings, and the dividend is around 4.5%. It is a rising dividend, and the growth perspectives going forward, it's a long-term investment, guys, okay? So don't expect to get overnight growth out of a company like Verizon, all right? And in this new communications services sector, it allows you to add a few more names that you may have not owned under the old telecommunications sector. All right, it allows a little bit more expansion and it calls for a little bit more exposure. But Verizon at $220 billion, man, recommending that folks pick up, you know, a 10-share or a 5-share block to just start their portfolio off. They're going to start it on the right foot, and they're going to enjoy a nice fat dividend that's paid every quarter in Verizon. The next one is Citigroup. Citigroup is another name that I've owned in the financial sector. That exposure recommended allocation is around 17%. Citigroup is a wonderful bank where they've split just about 50-50 of their business, both domestic and international. Their market cap is around $185 billion. One of the biggest banks in the world, and actually trading right now at less than 10 times earnings. So a real interesting name to get exposure. Now, what makes this kind of a dividend aristocrat is that we're at a 2.6% dividend clip on Citigroup, right? And it is anticipated to raise over time. So we want to make sure that we have some financials exposure in the portfolio. The next one may not be even in my top 5 of oil holdings, but I have held Exxon Mobil for a long time. Its market cap is at $350 billion, and instead of owning a bunch of bonds within my self-directed Roths, I actually opt to own the stock outright of some of these great, huge oil companies, one of the biggest ones in the world. And it may not be on my top list. I really like Marathon Petroleum. I like Valero. I like Anadarko. So some of those other offerings are probably my most favorite in the oil sector, and I don't even own those. But for a dividend payer, Exxon Mobil is one of those that you can buy and just sock in the portfolio really for the rest of your, it's one of those that you can own forever paying a 4% dividend, all right? Now, the next sector that I want to talk about getting some exposure in is Dow DuPont. Dow DuPont is of the materials sector, and you only need about 3% exposure in materials. Dow DuPont really, it's a hold rating right here. I've owned the stock for quite some time. I liked the merger and acquisition of Dow and DuPont when they merged together. And they're probably going to break up into 3 different companies, which is actually kind of exciting. But from a sum of the parts analysis, those breakups and cost-cutting initiatives are actually probably going to cut into what they're going to try to do in the short term but I'm actually holding this stock well long term. It's really one of the most respected and revered names in the industry in materials. It's 162 billion in market cap, trades at 13 times forward earnings, and pay you a nice healthy dividend of 2.4%. So Dow DuPont can help you get that 3% exposure in your portfolio and pay you a nice healthy dividend. Absolutely makes the top 25 list for a dividend aristocrat. And the last one is probably one of the strongest buys right now, as it's suffered a really huge pullback in the stock, and that is Kraft Heinz food. This is a company that is absolutely fantastic. 1/3 of their business is also overseas. 71 billion in market cap on Kraft Heinz food. It has pulled back significantly. The shares are undervalued right here at 14 times forward earnings, and you've got a monster 4.5 dividend. And the idea is to put these good names into that portfolio and allow those dividends to be paid to you unobstructed over time to accelerate that compounding growth, man. That is the niche on the Independent Investor channel. If you enjoy the message, man, I would ask for your subscription to the channel. Hit the subscribe button, hit the thumbs up button if you agree. You may agree or disagree with any of these names that I put forward, but really the niche in whatever you do in your investing career is to house whatever assets you do your own research on and get those assets into a self-directed account. Guys, leave your comments at the bottom of the video and share this message with anybody out there that you know is looking to get started in the stock market and they're looking to get some really good information up front, really to get started in the stock market correctly. Guys, thank you so much for tuning in, and good luck in your investment future.